Welcome to TradeTheNBI.com. This is John. This report is for the 5th. Well, we started out with our pre-market move that was slightly higher, but as we expected with what we were seeing from the readings, a continuation to the downside, and supported right on the 50%, battling with it right now. But at this point, you can see NBI white leading magenta, which does not bode well. That followed the shakeout was an early indication of where we were headed with this, and not a surprise. We've moved back with the orange dip underneath cyan here. That puts us in that continuation zone. Now, obviously, any pickup of orange in this particular case would result in a continuation of the same. The fact that we have that white NBI leading, if it remains that way, then yes, you'd be looking at a break of support and leading to continuation of that. No real shock within any of that stuff. Likewise, readings here from an NQ standpoint, and clearly a breakdown, but you're getting into that minus 22 here on DOC for midterm buyers. Haven't quite seen the full dip, only at minus 16 on the NASDAQ here from a DOC red. So if that gets down into the 20s, then you would definitely be looking for a reversal. But you can see also from the extreme below the red line, so we're in complete distribution state at this particular point. Yeah, it's going to modulate, but needless to say, you got no help here with Treasuries. The fact that the Fed really isn't kind of like nobody even talks about them anymore. They're sort of been sidelined completely, not even part of the dialogue anymore. What everyone's going to be watching is the oil situation, and that oil situation is complicated because you have what happened in the end of the year where everyone was using their gas supplies to try and keep prices lower, but now they've ended up with empty reservoirs that they're going to have to fill up as we get into spring, summertime. And that is going to have a major demand draw on oil. So that's difficult. While you may see an increase in production, will it be enough to let them fill up going into the summertime for the end of year? It's going to be an interesting one. And of course, Biden depleted the strategic reserve. Are they going to attempt to try and refill that? Would put further demand on things. You'd have to have production capabilities that may not exist unless you have, peace with Russia and a removal of sanctions. That could change things dramatically, couldn't it? So there's that dynamic. Again, these play out in time, not now. And right now, the market is looking at a situation where it's like, wow, they're seeing a lot of government employees that are falling by the wayside. A lot of the waste that was fueling this so-called, pump. But then you can see what we've been talking about. A lot of that money was wasted. Wasn't going towards anything productive, and that is not a good thing for GDP because you're not producing anything. It was just a consumption and or redistribution, and if you can get that into a more directed alignment, that's going to take time again. So see, again, you have that other effect where you have to move out in time in order for these things to have the effect. So in the short term, problematic. From a euro standpoint, again, more troublesome for them because they're all talking about having to try and sideswipe their budget alignment to create the funding that would be needed to maintain the war, because that's what they're asking to do in contravention to where Trump wants to lead things. So problematic that gold really didn't suffer much in that downturn within the market, which is interesting, showing its resilience and people still wanting to move there because of the expectation that we're not done with a stagflationary configuration, particularly with the transition of government workers having to shift into the non-government role, and whether there's enough demand for them to be able to find new work poses some interesting battles from that front. Where we didn't see any help was in the crypto, because they have no underpinning whatsoever from the demand standpoint. And you can see we're getting close to what? Oh, that's right, this positive extreme going all the way back here. What a shock that those could actually fill again. Not really, but fun to talk about that. Now, when we look at it from an ETH standpoint, it's much closer to its primary one, which was right here, and has already filled it. So you can see ETH has done exactly where Bitcoin has been a bit more resilient and hasn't quite filled its positive extremes. So makes a little bit of difference in the demand quality so to speak, of where you're seeing from the crypto side of where actual interest is. And from 50K, well, it's just all red, hasn't changed. So that's kind of a no-brainer. And that goes all the way back up from the original signal, which is right up there at the 61.53. And now we're down to, well, 59. So see, that gives you a real idea of how important it is when you follow that and you see those NBI white spikes, and the continuation gives new opportunities each time it takes place. This is a really brutal one because when you had the NBI white spike with magenta close to 25, once it dips below 25, forget it. That's You're going to zero. You don't even have to think about it. It's like makes it simple. From an intraday standpoint, the 5 minute here, look at that. That was the market open, and everybody just said run for the hills. But then you got a little bit too far, and they had to start buying calls to turn that around. But that was just a short-lived one to force some cover on that. And once they did, then they were able to start to buy those puts again, and that drove it right back down. And that's what we're seeing here is a continuation in the post-market. They tried to come back a little bit, but really, what's the impetus to want to fuel it? You've got no new fund money coming in for another week plus, so yeah, they're just sort of stuck. And so it's just a question of realignment, and then the question becomes, where do you go? So far, gold is the only asset class that's holding up, which is an interesting one from that perspective, because even the crypto experienced this. When you get these kind of sell-off situations, they've got to handle that margin. We talked about that one. That's a secondary factor, is that you've got a huge margin out there, and if you've got to pull from other areas to cover that, it's a real thing. So that's the long and the short of it. Exciting stuff, and like we figured, the volatility was going to continue because nothing's resolved yet. So where you hear those people talk about short-term pain for long-term benefit, potentially, but at this particular point, you're in the pain category. So as always, anything relevant, I'll put on the Skype chat for you. Have a good one. Trade well.